This morning, I logged into my bank account and found that I only had $103.89. I don't even have enough money in my bank account to pay my next credit card bill. And that's not by accident. I choose not to have any idle money in my possession. Money to me is a wasting asset. Over time, its value just sitting in the bank will become worth less and less. It's even worse. I counted my cash and I've only got $16 in single dollar bills in my car. That's how much I hate carrying any sort of idle cash around. That $16 and $103 will probably go to quick meals and street parking. The reason I don't have any money just lying around is because it's not working for me. I need that money to do something because I think of money as another pair of hands that can multiply any work I need to get done. Money can solve those types of issues. That's actually what they're used for. But many people are not utilizing the money they have. It's just sitting around in a bank making fractions of a percentage per year. 99.9% of my money is doing work in stocks and real estate and short-term funds. It's doing something. Treat your money just like how a bank treats money. That's my philosophy on wealth. Here's what I mean by that. A bank is so obsessed with getting you to keep your money in their checking or savings accounts. They want your money with them in a bank. But what do banks do with all that money? If you deposit $1,000 into a bank and you look at your account, it'll still say $1,000. Don't do anything for 5 years and look again and it'll still read $1,000 in your accounts. To most people, it just looks like that $1,000 is just sitting there in your bank. But it's not. Your money has been working really, really hard. Just not for you. Your $1,000 you've been keeping in your bank account is working hard for the bank. Your bank is using your $1,000 and lending out to people who need to loan for their business, for a house, for a car, for whatever. By law, most banks must keep 10% in deposit for people to withdraw their money. But that other 90% they can freely lend out while charging interest. Remember, you need to start thinking like a bank. Your $1,000 deposit is still there for you to withdraw from your bank. But as long as it sits in that bank, 90%, $900, is being lended out to someone else. That bank is collecting interest on that loan, and then maybe will give you some tiny interest for keeping your money in their bank. Many of the big banks will pay you 0.01% on your money every year you keep it with them. That means your $1,000 is making 10 cents every year. On the other end of that, your bank is lending out your money and charging 6% on that, and only paying you 0.1%. Banks are borrowing your money and using that money to make an investment that makes them money and pays you some interest for you to keep them money with them. So a long time ago, I started to think like a bank. I would borrow heavily at a rate I believe is reasonable. Then I'd find an investment that pays me more than the interest on that money I borrowed. Say I borrowed at 3% per year, invested that money that produced 10% per year. I pocket that 7% difference as profit, and I repeat that process. If I need to pay bills, like that credit card bill I have due soon, I take out some money from one of my investments and use that to pay. I vary where I put my money so that a good amount is liquid enough to be withdrawn, all while still helping me produce a return on my investments. There should be little to no money just sitting around. Holding onto your money is just wasteful. And it's best you start thinking like a bank. So how much money is just sitting around for you? Comment below. And as always, take care of your money.